Hi guys, welcome back to ValeTalks by Valetax. My name is Innocent Ryan E. Ferry, Global Market Analyst here at Valetax. And today with me, I have Antonio and I have Alberto Costa. Nice to have you guys on the call today. It's a beautiful Monday. It's the end of the World Cup. We had Spain win the World Cup, and sad for some people's goat, but regardless, we hope he doesn't get roasted as much as some of our own goat did. But it's a good thing to have you guys on the call today. It's a beautiful Monday. The market's just opened and we're about to, analyze the charts and have our normal discussions as always, like we used to do. Today's a bit different because we're going to be talking about something most traders fail to talk about and probably do not understand, and we're going to be conceptualizing it in ways that would help them understand. And we're going to be talking about risk or leverage, right? What really is the necessary component to be profitable, to make a lot of profits, from the market? Is it more risk? Is it better leverage on your account, or is it better overall leverage, financial leverage for you as a trader that helps you gain profitability, sustainability, and overall success in trading professionally, right? And with me, I have Costa. Costa is our in-house educator, as a global analyst as well at Valetax. And I also have with me Antonio. Thank you so much for being on here, guys. So what is our take, right? So I'm just going to be asking a few questions while I'm breaking down the charts too as well for our viewers. What exactly would we say is the most important and necessary component for more profitability and trading success, risk or leverage? So I would give the floor to Antonio.
All right. Well, thank you very much, Ryan. I think that the leverage is a very well discussion when we think about leverage is a component is a vital component of the trading.
Right.
With leverage, we can make more money, but with
Yeah.
leverage, we can lose more money as well, right? So
Sure.
it's a it's a two-way street. I think that the leverage is good if we know how to use it. I think that the issue is not about the leverage, but it's about the risk management, right?
Okay.
There's a lot of people that when start trading, well, almost everybody in the market wants to make money in the trading. They don't want the- just to give a rentabilization of their capital. They just want to make money in the market, and the leverage can make that for them. But they think have to they have to think in the risk management, because in the long run, the risk management will do the deal. I came from the professional side of the business. I
Yeah.
used to trade in the banks and financial institutions, etc. And in the banks, when I was thinking about an operation and I came to the treasury of the bank, the first
Yeah.
question they made me was what is the risk for this operation? They don't ask me about the how much money I will make or the profitability of the trade. No, no, no.
Mm,
How much risk do you want to take in this operation? Right. So
okay.
so this is the first question they make me.
Hmm.
And when I teach the traders how to trade, this
Yeah.
is this is something that I try to teach them. When you see a trade, the first question is where's the stop loss? How much money I will lose in this trade if everything goes wrong? Because it's just like an airplane, right? If you're on an airplane, you have to think what to do if the things go wrong. But if they goes right, you already know how to do it.
Right.
You already know how to proceed if everything goes well. But you have to analyze what to do if everything goes wrong, right?
Mm.
So this is my first idea about the leverage. You have to think about the risk management.
Okay. How about you, Costa?
Well, yeah, if I have, to choose the most important like component for improving the probability of success, you would say, in trading, I would say I agree with Antonio about the risk management because I believe that leverage itself doesn't create an edge. So it just only like increase your market exposure. Yes. If your analysis is wrong, higher leverage can actually make the mistake bigger. So I believe that risk management is what allows traders to survive long enough to apply their strategy. That's, I think, from my standpoint, that's the purpose of being in a trading community. So things like
Yeah.
proper precision sizing and then knowing your maximum loss and having a clear exit plan are what create consistency. That's what we want. So I mean, you can have like two traders using the same leverage. One trader manages risk properly and accepts small losses, while another trade risk too much because they focus only on profit. And I believe over time, the first trader has a much higher probability of success. So for me, leverage is a you could say it's a tool. It's a tool, but risk management is the foundation itself. So without risk management, the leverage can accelerate losses. With proper risk management, I believe leverage can be used more effectively. Yeah.
Okay, so let's bring it down to let's bring it down from not just the professional standpoint, and let's appeal more to the everyday conventional day trader, right? So we've had terms like, people say things like no risk, no Lambo, no risk, no Ferrari, you know, use a better lot size. If you don't take risk, you can't succeed, right? So no risks, no success, things like that.
Mm-hmm.
And then we've also understood, like in the brokerage part of the business, right? We understand what leverage is and what how leverage exposes your account. At the
Mm-hmm.
end of the day, what a broker gives to you is leverage and a good margin for you to be able to take advantage of it,
Mm-hmm.
right? So that's the importance of the lot sizes and small accounts have access to trade and all of those things, right? But then risk, not just as in risk management. So we have a trader. So let's say trader A and
Mm-hmm.
trader B. Trader A has 5,000 USD. Trader B has 50,000 USD, right? Trader
Mm-hmm.
A would need 10% of 5,000 USD to be able to make 500 USD. Trader B, on the other hand, needs 1%, right? Or 10% of trader B is 5,000. So 1% of trader B is 500. So we
Mm-hmm.
see that in terms of percentile mathematics, trader B just needs 1% of his accounts to earn 500. Trader A needs 10% of his accounts to make 500. Now,
Mm-hmm.
these two people are both traders. But now, in terms of risk, one person is taking more risk than the other one to make the same amount.
Mm-hmm.
So, if risk really brings profitability and success, can we really then say all it takes is risk? Or the second part, which is leverage, but not on the trading account aspect this time around, but we're looking at your ability and access to more liquidity. So the person's financial leverage as a trader. So Antonio probably has a better leverage financially than I do. Costa probably has a better
Mm-hmm.
leverage financially than I do, or I do better than him. Regardless, we cannot say, right? Because I don't know your liquidity level. So is it really risk that earns the trader or about his trading balance, his capital, his financial leverage as a person that earns him more money? Because two traders are taking the same trade. One person is risking 1%, the other person is risking 10% to make the same amount of money. So is it just risk management or is it necessary for a trader to have a good financial leverage? Antonio.
Good question, Ryan. I think
Yeah.
liquidity, it's definitely the answer. Uh, when you talk about risk reward, I think that's not a right or wrong answer to this question, because when you trade on the financial markets, you have an equation that when you have to decide if you want less risk or if you want more profitability. Okay, if you want less risk, what what will brings to you is less rentability. It's less money. It's less gain, right? You when you want less risk, when you want more rentability, you gonna bring together with you more risk. So it's a the risk reward. They have a relationship, a direct relationship, with you brings you more risk or it brings you more rentability.
Right.
I personally, uh, I'm not a risk taker. When I see a trades, I always want to have a more control risk, and it's okay that I will earn more money. It's okay for me, but
Right.
I want less risk. But there's traders that they want more risk, giving more. They want more rentability, knowing that this will bring more risk with with their trading, right? So this is this is an odd relationship, but in in general, I believe that the most liquidity, it's the easiest thing because the stop loss is inherent to our day-to-day profession, right? Everybody will be stop out. If I'm risking 1% of my account and I'll be stop out, okay, it's not and I have 30% of losses in my trading, that's okay and acceptable for me. But if I'm risking 30% of my capital, no, to the three stop loss with 10% each one, it will hurt me a lot because to regain this 30%, I will need to make 40%, right? Because it's exponential thing. So
Yeah.
at the end of the day,
Hmm.
there's this risk reward relationship, but in my point of view, liquidity, it's the key question in this. It's not just the risk management, right? You have to adjust your capital to have the same amount of money that a bigger guy makes. This, like this example you give, the trader A and trader B. I
Trader
think
B.
the trader B will have a more success in his life than the trader A. Yeah.
Okay. Okay. So in essence, we're coming to a point of agreement, right? To say that a bulk of success in trading doesn't just come from skill alone. It also comes from your financial capacity, your liquidity when it comes to trading, not just skill. Because we've seen people do maybe 1,000 to 30,000, maybe 10,000 to 50,000 or to 100,000. We've seen all this kind of trading style, but we know that it had to be a very high risk, very high leverage from the broker accounts too as well. Just giving them access to these things, but it's not very sustainable. Like it's not something that you would be able to consistently do long term. And just like the brain, right? We say, oh, the brain has a memory and everything. It's like a muscle and all of those things. But truth be told about it is you do something too long, your brain even tends to forget it's actually not the right thing to do. It categorizes it as, the right thing to do. And you do it long enough, you lose more than you actually win. Because when it comes to flipping, it's not always that successful. But that being said, right, it means that, like I said, we're coming to a conclusion to say to
Hmm.
actually, earn, right, Costa, to actually earn as much as we want to earn, the dream life, right, that's sold on
Hmm.
social media doesn't come from small liquidity or small trading balance. Do you agree?
Doesn't come from a small liquidity. Okay. So
Yeah.
yeah, I will answer maybe adding a little bit about the questions before. Yeah. So you say about I think from professional standpoint, when uh, it's not for me. It's not about choosing between risk management or the leverage itself because I believe they serve different purposes. But I think when we talk about success in trading,
Right.
yes, it's not only about skill. skill is definitely important. The way that we know about the technical, about the fundamentals, on all the experiences, all the years, yeah, of course. But sustainability, I think, is what separates successful traders from short-term winners. Because, yeah, from my own personal experience, there's a lot of short-term winners in which maybe only trades for 6 months, 7 months. They won it all and then gone. So I believe we've seen examples of traders like you turning a small, like you said, turning like a small account into much larger
Right.
one very quickly, like turning 1,000 into 2,000, 5,000, even 10,000. But in many cases, that kind of growth usually involves very, very high risk, aggressive leverage, or oversized positions. Well, the
Right.
question is not whether it's possible. It is possible, it is for me. Huh? The question is whether it is repeatable. So can
Mm.
they repeat that and sustainable over the long term? Because I believe trading is not just about one, two, three, four successful trade or one impressive result. Professional traders focus on, again, consistency. I will repeat that word again. I'm sorry, but being able to perform through different market conditions while protecting their capital. So
Right.
about the liquidity and the leverage, I believe they can give traders more access and flexibility, but they don't create profitability by themselves. Having more leverage doesn't automatically mean that you can earn more. Having more capital doesn't automatically mean you will succeed, but the ability to generate consistent returns comes from combining all the skills that you said, yeah, the market knowledge, the strategy, and the most important thing is discipline. I just have a like a discussion, I think on Saturday with like this kind of public figure here in Indonesia, is one of the legends in forex. Again, almost everyone said it's about the discipline. This
Mm.
discipline, of course, also consisting about the proper risk management. So I believe in essence, success in trading is not just about how much that you can make in the best scenario, but it's about whether you can survive, adapt, and repeat that performance over time.
Over time.
We talk here back in Saturday that maybe only 5 to 10% in Indonesia that can be categorized as those kind of success trading, because 90% of all they just don't have the same discipline on it. But anyone can have a lucky trade, but for me, consistency is what turns trading from speculations into a profession.
Thank you. Thank you very much. I think you simplified it and made it as easy as possible because something I've also noticed is I think a sad part even on the brokerage side is
Hmm.
the the world kind of rewards the world kind of rewards results more than it does reward process. Let me say that again. The
Hmm.
world re the world rewards results more than it rewards process.
Mm.
So we see a lot of limelight shining on people who have the most money rather than people who have done it properly.
Okay.
So there are a lot of traders that have stayed disciplined. They take risk management seriously. They trade. In fact, when you look at their books, they
Hmm.
have better books than most of the quote unquote bigger traders that are out there,
Hmm.
right?
Hmm.
But the world will reward the one who has made the most money over the one who actually is a better trader. So we see being a better trader as the person with the most profits. So if a trader takes 10,000 10,000 USD to 250,000, right? In
Hmm.
one trade by maximizing his leverage and going crazy on risk. And he does that a good number of times, right?
Hmm.
And probably on his portfolio it's shown that he's traded over 10,000 lots. He's made over he's made over 2 million USD in profits, right?
Mm-hmm.
With
Mm-hmm.
that style of trading, with that way of trading, which professionally, if we're to take him to, to a hedge fund, right? Or to a bank floor, they're going to look at his books and you're going to be like, this is crazy. Like, why were you taking this kind of risks? But I've seen the world, respect, right, and reward those traders better than they do the traders who take risk management important, people who calculate their lot sizes, who have better positions. They can define their trades. Like when you go through their books, you would see that this
Mm-hmm.
person's risk management first
Yeah.
and gradual returns. Over a period of time, he has successfully, made 20%, right,
Mm-hmm.
of a 100K account in over 6 months. But
Mm-hmm.
then he's not acknowledged, he's not praised, he's not rewarded. But the person who has been able to take crazy risk and done 400% in over 2 months is a better trader than him. Why?
All right. So, uh, yeah, can I answer this? Yeah. So,
Yeah.
I actually agree that this is one of the, I believe, challenges in our industry. So sometimes the market and even the public tend to focus more on of course, the outcome, the wins that people visible to see rather than the process. People usually see the headline, how much profit someone made, how fast they grew an account, even if we look at the YouTube's account for some of the traders, the headlines of the YouTube's title itself says gain here, again, gain how much for how much time, all that, or
Mm,
what percentage return that they achieve. But they don't always see the risk behind that result. So again, for example, like the leverage use, the DJ, the consistency, or whether the strategy is sustainable, they don't see that. So, for
yeah.
example, someone who turns 10,000 into 50,000, say, will naturally attract a lot of attention. Of course, the percentage returns looks incredible, but professionally, I believe the next question should always be, how was that return achieved? What was the risk taken? Was it repeatable again? So in
Yeah.
professional environments like hedge funds, please correct me if I'm wrong, performance matters, but they don't only evaluate the final return. They also look at risk-adjusted returns. So maximum DD, consistency, capital preserve, and the ability to perform across different market conditions. So yes,
Yeah.
the work often rewards with visible results. With a very high return, will naturally, get attention. But professionally, investors understand that a great return with uncontrolled risk is very different from a sustainable return. I think, yeah, the real achievement is not just making a lot of money in one period. For me, yeah, the real achievement is being able to generate returns while managing risk and repeating that process consistently. But
Yeah.
I think, for my personal opinion, if you have one this big profitable trade, you don't share it to your friend. Because they will come to you, they will ask you how, and you're gonna teach them, I think, really, really risky trades, because it had
Yeah.
happened to me like maybe 3 to 4 years ago. And yeah, that's I think come from my social responsibility not to do that again. So again, that's that.
So, Antonio, what do you think? What do you think about that take?
Well, when you talk about the social media, the exposure, they will look about more money because social media is a word of illusion, right? They just want
Right.
to see illusions. The retail traders in general, they just they're just moved by their greed. They just want to see more money. They want to see Lambos. They want to see jets. Travels. This is what jumps into their eyes. But when you're talking about the professional world, it's different. The professional world, it's they're they're much about their process. For example, when you are a professional trader for a bank, you have the risk department, right, which is attached to the treasury desk. So every trade you make are there. The risk department are closing look what you were doing, right? So if you're doing something with way that's way too much risky, or using too much leverage, or using too much money, they will close your position, okay? Because it's out of control. I give you an example. I'm a evaluator of a college here that they have a class of trading. They have a trading class. To the a very well knowledge here in Brazil, college here in Brazil. And as an evaluator, much of the time I didn't pass the guy who makes more money. I pass the guy who makes the best trade instead of the results. Because in the long run, if you guys are risking too much, but he's making a lot of money in the short term, in the
Yeah.
long run they will not succeed. Right? So most of the time, I'm approve students who made the better process, an
Right.
analysis, risk reward, a trade that makes sense. Because sometimes I see that traders that make a lot of money, but they just risk all in, just like in poker. They did a all in. They put all their money, all their bad,
Yeah.
the leverage.
Right.
eh, okay, they made a lot of money, but in the long run, this is will not be profitable, right? In the long run, it's all about risk.
Mm.
This is the deal. The banks, okay, the banks, they made a lot of money in trading. Yes, they made a lot of money in trading, but they first they look at the risk. They just control the risk. They just control how much they can lose in each one of the trades, in each one of the books. And this is control, and they make money because they have a lot of money. That's the thing. And if the retail traders want to succeed in the long run, they have to think about risk. Okay, I will make less money because my account it's not so big, but this is a process, right? If you want $100 today, you will earning little by little, and then you have a $500, and then you will have $1,000, and then you will have a $10,000. It's a process, right? You have to respect the process, because I already saw some experiments that the guy that they trades just on the flip of the coin. They flip of the coin. If this is tails, it's sell. If it's a buy, and they apply a proper risk management, and the guy made money with the flip of a coin doing a risk management. So this is no setup. He didn't saw a chart. He's just flip up the coin, risk management, uh, to risk reward with 2 to 1 or 3 to 1, and they make money. So this is proof that the trading is the technique. It's important, right? It increases our odds, and
Yeah.
the macros and the technical analysis, they're essential part of the trading. But the risk, it's also important. So we can just give credit to the guys who made more money. But
Yeah.
the process, I think, it's more important than the just the money in itself, because social media, it's all about illusion, right?
Yeah, it's always all about the money. Thank you guys so much for that view. Why I brought it up is I feel like a lot of traders need to understand that, because there are a lot of retail traders out there beating themselves up, right? Talking about
Yeah.
how they're not good traders because they're not making as much money. If you're a good trader, it's expected that you're making crazy amount of figures and more money and all of this. And I recently shot a reel, right? Where I
Mhm.
was talking about if it's possible to leave off, forex trading. And it's one of the major questions I think for any day trader currently in the 21st century. It's one of the upcoming questions that your parents would ask you. Are you sure you could leave off trading? Your family members, there's a pressure on you to. But the
Mhm.
thing here is they they fail to see it, because when we see anything too grand, right? The the mind starts to kick a probability for someone who is outside of it, is trying to look at the probabilities. Like Antonio, let me use a very good example. If your kid said he was going to the playground to play football, and you've gotten out of 50 parents who allowed your kids go to the playground, 40 of them have told you that their kids all got injured and they had to go to the hospital. And there is a likelihood you're not letting your son go to the playground, right? But that's because there's a higher number of people who, have gone to, right, have gone to the hospital. Now, similarly, let's flip that to the positive. If there are 50 people going to the park, right, and there are only 10 people who would never go to the hospital, what are the chances that you believe so much that your child is going to be amongst the 10 people who never go to the hospital? The brain is always going to pick the negative first before the positive, right? So it's the same
Yeah.
thing when family members go online and see that there are just really a few people that have this built up life with the trading and everything, they look at the number and they're like, it's better you stick to something that is more reliable, more promising. And like we've clearly, pointed out, it's due to social media pressure and all of these things, right? So a lot of traders are out here thinking they're not doing enough. They're not a good trader yet. I hear people say things like, you're
Mm-hmm.
not a profitable trader because you're not driving a Lamborghini, or you're not driving a
Mm-hmm.
Ferrari. They quote unquote tag profitability to your ability, or to your access to all of this luxurious and high fancy things. And this same traders saying these things, calling themselves unprofitable, seem to forget that they've been able to buy a car from trading. They've been able to pay their dues, the responsibilities of trading. They pay their house rent of trading. They've gone months consistently making $1,000, 500, 1,500, 2,000, and they've done that all year long. But somehow there is the silent voice in them that tells them that they're not profitable traders. And that's because they quote unquote have tied profitability to quantum, to quantity rather than quality. So they don't see their good trades any longer. They see the profit of other traders taking crazy risks as being profitable. And that was just why I asked that question, so that our viewers at home and at large would be able to really, digest this and stop, putting themselves in very condescending, positions of thinking they're not profitable traders just because they're not making as much money. If the process is right and the outcome is good, it's not about the quantity at that time, but it's about the quality and, the altitude you use to go, through that thing. Because I believe if you have a habit of consistently making 1,000, 2,000 at the end of the month, and you're
Mm-hmm.
managing your risk, right? You're not taking losses, you're managing your risk, you're coming out profitable at the end of every month. You're profitable. You are a profitable trader. I always describe to my students that what makes profitability is your ability to, you know, move from loss to win at the end of a trading period. So if you give yourself a trading period of every quarter, and if every quarter you've successfully had a positive P&L, you are a profitable trader. Because at the end of the day, you've been able to successfully manage your risk and have a better reward. That makes you profitable. So that was just why I asked that question, so that, like I said, they become more confident in their trades, to understand that even the process is rewardable, not
Mm-hmm.
just the outcome. The process itself, if you're doing that well, it shows signs that you are a profitable trader. If you ever come in contact with an investor, there are better chances a smart investor would go with you that has lesser returns than the person that has, crazy returns, because he knows the amount of risks it takes to get those returns, and he's not going to be willing to put his money on the line for such behavior. So just if you're watching and you probably have been having a down in your spirit in terms of if you're doing well as a trader, if your process is good and you know you're doing the right things and you're disciplined, please keep doing whatever it is you are doing. I think we're running into time, and I'm just trying to make sure that we try to keep the live as short as possible for those who are going to rewatch. So
Mhm.
so my last question for both of us would be, what would we say eventually, right, should be the approach for every trader? What should be the approach when it comes to risk and leverage? Should traders, on the should traders what should traders pick? I think that's the way to frame the question. And how should they approach it? Because at the end of the day, we've clearly put that fact out here that risk and leverage are both important. So how do they pair those two together to be proper traders? And if they're struggling with that, how do they fix that up? Antonio?
Oh, I think that the first of all is that they have to lock the risk in all the trades, right? It's a common sense that they have to risk 1% of their account per trade.
Okay.
Sometimes I say that they can use higher numbers as long as they are comfortable to losing it. For example, I had a student that start trading with $10,000 in their account. I say, "Are you comfortable to losing 1% per trade?" It's $100. Okay, I'm comfortable to do it. Okay, and if you lose 5 trades in a row, which is
No.
sometimes is common, it will affect your judgment. It will affect your next trades. Oh no, the $100 in a loss. Yes, yes, it will affect me. So the 1% is too high for you,
Mm.
right? But there are other traders that they have, for example, $1,000 in their account, but
Right.
they have another source of income where they earn like $10,000 per month. So if they risk 10%, of their trading account, not too much deal. So first of all, they have to risk what 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 it's okay in their heart and in their financial conditions, right? When you say 1% per trade is a general rule, but if sometimes they increase this to 10 to 2% or to 5%, if they have another source of income, it's okay. Okay.
Okay.
And then we came to the trading and the setups, right? If they have a process of trading, they have an analysis which is okay, they have a trading method which is proven to be good,
Yeah.
and and it sometimes he has a good sign of trade he can risk because he knows the probabilities of this trade to be wrong or right. So it's like a combination of things, but they have to lock the risk and to be the same in all of it. It could be 1%, it could be 5%, could be 2%, but it's a rule, and this rule has to be defined before he start to trading, right? And it has to be fixed, because when the trading comes and then the emotion and then he stop out and he tries to recovery, and they blew all of their plan. So this plan has to be defined before he started trading, and that's the discipline that Albert said. He has to to have the discipline to follow this plan. So this is the better way to be a successful trader in the long run.
In the long run. So at the end of the day, it's combining risk management, understanding his financial capacity, which is financial leverage, which I always preach. I would always tell to my students that risk management is off the chart first before on the chart. So it always gets them confused.
Yeah.
I'm like, you and I could have 1,000, right, in our trading balance, right? But what is most important is majorly comes from what else I do. How much do I have back in my reserves, right? Because if I
Yeah.
have if I have 100,000 sitting comfortably, I can decide to take a risk of 10% on my 1,000 account. But if you have just 1,000, you can't afford to take such risks, right? So I hope you guys are paying attention at home, wherever you're watching from. Your financial capacity off the charts is also a risk management. You need to understand that, right? So me, I usually would call it risk assessment because I want to assess my risk. If I lose 1,000, am I going home hungry, or can I live through, the next couple of days too as well? So, Costa, how about you? Do
Well,
you agree? Do you second
uh,
that?
yes, I think, yeah, of course, I agree because I've been telling about consistent and discipline. So I think to wrap it up, the message you said for every trader, I think I believe that trading is not just only about leverage, profit targets, or maybe chasing the biggest return. I think the most important part is understanding it first, building discipline, as Antonio would say, that have some rules first, and creating a
Okay.
process that you can follow consistent, that you can follow that consistently. So again, maybe leverage can be useful tool, give you traders more like flexibilities and all, but risk management is the foundation, is what keeps you in the game. So for everyone, I believe who is right now currently learning trading, do not get discouraged by comparing yourself to someone else's result. You often only see the rewards, the profit, the success, but you don't see that the journey, the losses, the lessons. All these years that I've been talking to a lot of people that still continue in trading, all the losses they keep it all by themselves. So I believe that trading is a skill that takes time to develop. Focus on improving your knowledge, protecting your capital is the most important thing, and becoming better with every decision you make. I would add also, if you want to try some maybe backtest, try to some psychological effects on you, you could use maybe second account, maybe like a send account, right,
Mm.
with the same amount numbers that being displayed on your screen, right? You could
Yeah.
trade like what you want, but if you with your main account, uh, the building discipline, the rules that you've been set, you must follow that consistently, I believe. So uh, I believe that success that in trading is not about making one or two big winning trade. It's
Yeah.
about the building the ability to make the good decisions repeatedly over the long term. So
Over the
yeah,
long.
yes. So
All
I
right.
I would say that keep learning, guys. Keep learning. The traders who survive and continue improving are the ones who give themselves the opportunity to succeed. So yeah, do it on your own. Do it with every way that you're comfortable, but be disciplined and be true to yourself, I
I feel like Antonio and Costa are advising me. I think I did the advice.
believe. Nah, I
Thank you
think
guys so much. Thank you guys so much for for that advice, and thank you for joining as well. To all our viewers watching out there, home, far, wide, close, company, friends, family, colleagues, students, clients. The whole essence for today's call is, for me, the topic was more about, enriching the mind of the basic trader, right? Why the basic trader needs to really understand why risk and leverage are important, not just on the chart, but outside the chart too as well, right? So everyone has his battle and everyone has his strain of life. So someone who's making 1 million didn't make 1 million from 100, right? You have to grow yourself, and you also need to improve your financial literacy to know how you compound your profits into bigger capital and manage more risk. It's a growth system. At the end of the day, trading is a business. No business became super successful overnight. Even when you see headlines saying, "Oh, um, one company became $1 billion company," it didn't become $1 billion company in just 3 years.
mm,
They've been a groundwork, right from time, probably 5 years before the company became public,
yes.
So we need to also keep that in mind. So thank you guys so much for watching. If you're yet to follow Valetax on YouTube, please don't forget to hit that follow button, leave a thumbs up if you're watching and you've enjoyed the session so far. And don't forget to trade with Valetax. Hit the link in our bio to get your account registered. We have accounts starting from standard at just $1 deposit and $50 for our ECN and Pro accounts. And after that, you can make any other deposit you want. We have leverages has 1 to 2,000 for those people who are high leverage traders. And then, advisably would say, use a lower leverage if you're just starting so that you have more control over your risk and your margin while trading. But until next time, it was a pleasure having Antonio and Costa on the call. It's always nice to have you guys. We didn't have Manesh, this week, but I'm sure we'll have Manesh and Dennis next week. But until next time, it's Ryan, and this is Valetax. Trade smart and trade safe, guys. Cheers.
Cheers. Thank you.
Thank you. Bye bye.
Bye bye.